Good morning, it's Harvey Jackson from Producer Profit. Quite a few news items today. Just going to touch on futures trading reports, commitment traders, Chinese New Year. As you can see here, there's a few different things that are going to hit the docket today or this week, and we can maybe just cover them off as we go. Oil swings amid U.S. trade policy, and there's a few different things that are being talked about in here, but mainly just Trump talking about trying to push down oil prices and trying to squeeze the Russia revenue. It's Chinese New Year starting on Wednesday, so Chinese New Year's Eve is on Tuesday, but they're basically off for I think it's around 16 days, but the first 8 days is the big part of the holiday where I think they're definitely not. Um, just a quick note here. There's talking about food consumption and how it's shifting in diets because of the price of beef, and I do have a little bit of a graphic at the very end there, so if you want to stick around for that. Over the weekend or on Saturday, or there's been mentioned that they're going to cut the funding for humanitarian aid to Ukraine, and there's some reaction by Zelensky, but there's still going to be some aid for weapons. Bank of Canada comes out with some decisions on the 29th, and it's widely expected that they are going to cut rates again, another 25 basis points. There's a 83% chance that it's going to happen. Karen Braun, she just note here, there was a tensions talking about Colombia. Uh, Trump was talking about sending some military planes to Colombia to ship back some of their illegal immigrants, and they weren't going to accept them. And this is just the implication of how much corn they buy, and if they were to put counter tariffs on. It sounds like they were going to, and then they pulled back at the end. Commitment traders, you can see that we're almost reaching these 20 to 21 record levels of long corn and soybean futures. Wheat is still a little bit short, and it would expect when we get into a growing season that would change. So here's some of the notes that you guys would have had in your inbox. The crush is picked up its pace a little wee bit, but it's still starting to lag on some of the exports. So, but it's still pretty robust. And this is the current trade that we have on here. So short futures at 645, exit at 580, and the stop loss at 665. Soybeans, here's the trade that's still on there as well. Short futures at 1046, exit at 910, and exit if it closes above 11. Corn, here's the position that we have on suggested on there as well. Short futures at 485, exit at 452. This came from X, posted on Mitch Miller's account, and it's just giving us a bit of a graphic view of the Canadian and the global oil and rapeseed oil stocks. And you can see that there's pretty tight stocks to use, obviously down in that 7%, and your ending stocks are going to be very, very tight. And this is showing this exact same thing. So canola is trading basically just a buck up. Rapeseed is unchanged. Soybean oil is down 0.66 of a penny. Palm oil is unchanged, and crude oil is flat as well, 60 cents down the barrel. And your soybean is down 7.6, and your wheats are basically right around 2 to flat, and the Canadian dollar is slightly down as well. So this is the graphic of what it looks like. It looks like we're having trouble getting through this 50% retracement, and the 200-day moving average seems to be resistance to trade above. We'd like to get into this range to make a higher high, but we would have to break through that to get there. Here's your November 25. We're trading right at those higher highs made back in early January, but looking for that kind of a value in there as well. Here's European rapeseed priced in Canadian dollars minus the price of canola, and it is $148 more expensive in Canadian dollars than Canadian canola. Here we're basically building into a wedge here, as long as we can stay supported on the upward trend here. Soybean oil, basically going down off this flagpole, so maybe not quite what we want to see on the soybean oil to support the canola, but it's not the best story. And you would say the palm oil has the same kind of story, but still currently above the 200-day moving average, but it needs some support there. Soybeans themselves, nice little upward trend from December lows that it's made. Looks like there's some resistance at the 78.6 retracement value, but it's currently in a bit of a wave down here. Crude oil, looking at this moving average, 20-day moving average for support, and the 61.8 as a support on the Fibonacci retracement as well. So Canadian dollar, this is back when there was the inauguration of Trump last week, and just the wide range that we had, and we're basically right in the middle if we were to put a Fibonacci retracement on it just for this timeline. And this is what it looks like since August, and you can see that we're basically trading sideways into this channel with the talk that there's going to be some rate changes. Now, I don't know how that's going to impact. It could give us a little bit of lift, but we'll see. So if we look farther back at the Canadian dollar, we do have 61.15 as your support below this if it does break through. But we did hit these lower lows down here back in 99 to 2003. Let's have a look at wheat. Wheat had an okay week last week and then tailed off. And some of the reason that wheat is only getting the bids out in Alberta, it's because of the Great Lakes here. And it doesn't look like a whole lot of ice, but when you're basically having to track through to get to there to be able to get some of the Western Canadian wheat out, I don't know the exact tract, but it's something like that. So you got lots of ice built up in areas here that they don't even they will not operate the locks because of it. And this is just your ice percentile over the many years, and the black line is just where it currently is. It's not extreme, but expect if we get some colder weather that it's still going to be holding on there. So here's your red winter, same kind of long candle that we got last week, and the tail off is the same. Let's just have a look to see when will this all happen to wake up. So here's your red winter here, and it's basically in dormancy right now. So looking at it maybe a little bit farther, uh, the January crop calendar just says basically dormant in our growing regions, and the same thing when we look at the Black Sea in Europe. Well, you have to flip all the way over to March before you start seeing some of this breaking out. For as far as when it breaks out of dormancy. So March is your timeline that you're going to see potential market wake up because the crop is now growing or breaking out of dormancy. Corn, this is probably the best story we have on the grains. It made its higher high back here and still kind of trading at some really decent levels. This just seems to be a pretty high mark. And if we look at live cattle, and this is the highs that we've ever, I think the highest that we've ever made when we look at this chart and go all the way back to 2008, and it does go farther back, but this is our current trend, and it's just phenomenal, really. And that's all I have for you today.